Hello traders, hello everyone, my name is Gregor and welcome to a new video update surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro, cable, silver, DAX and dollar against Mexican peso. So euro dollar is higher, but probably due to some optimism that came out yesterday from Russia and Ukraine talks. So what we are seeing is actually still very strong stock market, still searching for resistance, which in the intraday basis may not be so far away. So this allowed euro dollar also to come a little bit higher. However, the ECB today just said that probably they will not hike a lot this year, maybe one hike towards the end of the year. So this is again something that could limit the upside in euro dollar, especially if we consider that you have the Fed with completely more aggressive hawkish policy. So in my opinion, there's still a risk that euro dollar will come to the downside. If we look here at some technical stuff, well, notice that here euro dollar is still bearish as long as we are trading below 50 period moving average and 100. So this could be very nice resistance. Also, we are looking at this current price trading at this previous swing lows as well. So this is clearly a very important level which should hold for euro dollar to stay bearish. So for now, in my opinion, if we have some higher prices, it's still too soon to say that we are bottoming. Why? Because if you look closely on the 4-hour chart, well, notice that this is still a free wave movement. I cannot see 5 waves up. Of course, this third leg can always become a little bit more extended, and even in some cases wave C can become wave 3. But at this stage, when we are still trading below this upper trend line resistance, and currently we are at the first few resistance levels, I really think that turning aggressively bullish here would be too soon, in my opinion. So for now, euro dollar is neutral, but I would be willing to turn aggressively bearish if we see a drop back close to 109.40. Then I think still that this 108 can be in danger. If we suddenly rally, let's say, back towards 1.1400, then of course the trend is likely already changing. Now let's take a look on cable. Now pound has been one of the weakest recently, probably due to the speculators that haven't paid much of optimism to pound because of less aggressive Bank of England regarding their interest rates policy. So I still think that this market could actually retest the lows here around 1.3 level. More importantly, notice that the recovery is made by free wave, the recent one, and also we failed to break above the previous 1.3 to 70 resistance. So this can either be still, this drop that we are seeing currently can still be part of a wave B, maybe as a triangle if we get something more complex, or maybe we'll see immediate straight to new low if 13045 is broken. Okay, so definitely keep an eye on this level here. So generally speaking, cable, in my opinion, still is going to search for lower supports here when looking at this complex correction that, in my opinion, can be in very late stages but still underway, away from 2021 highs. And as I said, the reason is very simple: you have a free wave rally from the lows. Now let's take a look on silver. Now silver has made some very interesting price action yesterday. So after this some positive news from Ukraine and Russia, we have firstly seen a very strong drop on crude oil and metals, but then quickly those markets stabilized. So it appears that despite some positive news, well, speculators, investors are still concerned, okay, regarding the situation in Ukraine. Otherwise, those crude oil prices, energy prices, and metals in particular should be much lower. So there's still traders, investors who are looking for safety, and metals definitely is one of them. So looking at this price action silver from a technical perspective, notice that this trend line is very important from 2021 highs. We've broken above it and now we are retesting it. More importantly, we also have seen yesterday's spike down to this 200 simple daily moving average. Okay, so you can also see a very nice candlestick formation here. This is not looking bearish to me. Okay, of course it can still become a very bearish situation if we break 23.90, but for now that's not the case yet. Okay, so in my opinion this still can be a counter trend movement as long as this market is trading above 23.80 as I said. Also, if you look at the 1 hour time frame chart, notice that I can count 5 waves down, and normally when you have this completed 5 waves down confirmed by this reversal through the trend line, this normally suggests that trend is changing, even if just temporary. And always when you see a trend in change in direction, you should be aware of a free wave structures, especially when you have such a sharp movement. Why? Because even if this rise away from 23.90 is going to be just temporary and corrective, meaning that you will see more weakness later on, well, you still need A, B, C rise, right? Because that's the minimum substructure of a corrective price action. So either that's wave A, maybe even wave 1, wave 2, maybe wave B. In both cases, we will be looking for more upside into wave C or possibly even much stronger wave 3. So watch out for silver. I think it's quite interesting here from a short-term perspective. As I said, as long as we are above 23.80, this metal could see more upside. Also, keep an eye on this gold-silver ratio. I have it here at the bottom. Notice that we also have seen some spike price action here on this one as well. So as long as this swing high is in place here, I think that this could see more weakness, and in such case it means that silver could do much better in uptrends. Now let's take a look also on German DAX. Now German DAX is currently recovering after this very sharp drop here from new all-time highs. So I think that now we are in a corrective recovery. Of course, even if it's a wave B, can move back into the previous highs, because you never know, it can be even a flat correction. So looking at the daily chart here, to give you the full perspective, this is what I will be tracking, these 3 waves up for a wave B. So I think the temporary bottom or even significant bottom here has been put in place, and we will see more upside for minimum 3 wave recovery. Why I think that more upside should be seen? Well, because away from that low, I can count 5 waves up, and always when I can count 5 waves up, well, it suggests that market is actually confirming that market is bottoming and the trend is changing. So you should be expecting more upside after pullbacks, because you always want to look into direction where you have these strong impulses. So I will be looking for more upside here. Now looking at the 4-hour time frame, well, notice that we have very nice ongoing 5-wave movement. This is very bullish, but of course we know that after 5 waves, market makes a pullback. So you have 5 steps forward, 3 steps back. That's how it works. So now I am expecting a 3-wave retracement. Now very nice supports usually comes at the former wave 4, which in our case is around 14,200, and then you have a second support around 3,600, where was wave 4 of 2 lesser degrees. Okay, so watch out this trend line. If broken a daily close below it today, could really put in this more weakness, and then watch out for potential rally. And now final market, let's take a look on dollar Mexican peso. Now this one is definitely making a very nice break to the downside. We have been talking about this one a lot over the last few weeks, and so far you can see a strong move below this trend line support, extended trend line out from this triangle. So I'm looking for a retracement for the move all the way back to this 2021 low. So this would be around 19.50. This could also come in play if we consider that we are in a 5th wave, where you have the projection here. The first support, yes, could be around 19.70, but then the second one, as I said, 19.50. So there are probably a lot of stop orders below that swing lows at these levels. So as you know, when those markets, when market will fill these unfilled orders, then obviously a new shift in trend may occur. Okay, also keep in mind that we are approaching the end of the month, the end of the first quarter, so obviously this could also have some impact on this shift in trends. Okay, traders, thank you very much for your attention. Hope that you enjoyed the video, and I will catch you with the next update. Bye.